So I will start off the first question to Cheryl Alston to have her tell us a little about the Dallas retirement system, its international investment strategies, and what, if any, criteria she would add to potentially investing in Africa.
Well, thank you, and I'd like to thank African Investor for inviting me to attend and speak at the conference. And first, a little bit about the Dallas Employees Retirement Fund. I'm the executive director. The fund's been around for about 70 years. We represent $3 billion, $3.5 billion. And currently, when you look at our asset allocation, we have over a third that's invested internationally. So if you look at global equity funds, international equity funds, private equity, we have over a third that's invested internationally. But when I go and look at how much, and we select managers and we let them invest broadly. But when you look at how much they have actually put in Africa, it is a very small percentage. And so that tells us that we need to be more intentional about our mandates about investing in the region. And so just to kind of step back and what Raphael talked a little bit about was the U.S. pension funds, and just to kind of give you a little bit of the size and scale. So the top 300 U.S. public pension funds represent $15 trillion. It represents 43% of global pension assets. Was similar to some of the African pension funds, we have long-term liabilities. We have a very long-term focus. We're thinking 15, 20, 30 years investment horizon. And we are return focused. And I think that's very important. Our actual rate that we need to achieve, it varies for some between 5 to 8%. And so you might turn around and say, why all the interest in Africa? And it's simply the returns. I heard the earlier panel from the pension fund from South Africa talk about double-digit returns. Well, if you look at, and everyone knows that if you look at some of the current rates of return for some other asset classes, it's going to be considerably lower. So pension funds need to look at what are the opportunities to increase to achieve those types of returns, high single digits, double-digit returns, long term. And so Africa rises to the top in that discussion. And so in order for us to get there, and we talked a little bit about this, a couple things. One is board education. It's the ABCs. I think a lot of the investment staff is aware, but we all report to a board. And so we need to make sure that our board is educated about Africa past the headlines. I think that's very important because they'll see the headlines and they'll think of it as, from a risk perspective, that it's a little bit too risky. But I think that people, that's one of the things, and what Raphael was talking about, the ABCs of Africa. The other thing I think is really the tools. We hire managers, and what we've seen in the last few years that may not have existed 15 to 20 years ago, we're seeing a lot of great managers, private equity funds who have feet on the ground in Africa, who understand the returns that we hope to achieve. And so I think that there are more ways or tools that we can use to invest in Africa. And so with that, I'll wind up my comments.
Thank you, Cheryl.
Doing business in Africa. You can't afford to be without Africa Investor.